Ladies and gentlemen, boys and girls, welcome back to the show. Let me jump straight out of your way. Let's come into the get into the crypto. You know what? I'm going to start all over again. Welcome back. Let's check out the Fear and Greed Index. What you see ahead of you is, well, more fear, extreme fear by the numbers. We're still below the 25 mark, which for the Crypto Fear and Greed Index indicates extreme fear. Here's the last 7 days. Oh, no, we're looking at the last month, and we've pretty much crawled sideways in that sentiment. I think it's a phenomenal counter indicator. This would let you know, for example, without giving you any kind of advice, whether or not other people are feeling fearful and you in turn can be greedy, or vice versa. Others are feeling very, very greedy, and maybe it's time for you to average out of your positions, sell, or just do something a bit more defensive because everyone else is riding high on euphoria and not paying attention to the road ahead. So just taking a look at that, this has really validated my dollar cost average strategy and my very, very steady and slow movement into certain positions, specifically with mining on Ethereum. The profit, I think, indicates that for right now, but I have a little bit of a surprise for you guys. You'll check that. You'll be able to see that in just a minute here. Well, I don't want to reveal too much, but more on that later. Let's take a look and zoom out a little bit more over the last 3 months for the Crypto Fear and Greed Index. And you can see that we go from actually greed, bordering on extreme greed within the last 3 months. And now, since we've come down from those really high euphoric heights of the 60Ks, 64K, almost 65K, with Bitcoin in particular, we can see that people have they've kind of curbed their enthusiasm, right? They've kind of tempered their expectations for the performance, specifically of Bitcoin and of the larger cap coins. This is to be expected, right? And sadly, I didn't divest any of profits, didn't take any profits when we were closer to 65K from my Bitcoin holdings. Oh well, live and learn. I also acquired much lower than that point, and I feel just fine about dollar cost averaging right where I am right now. I'm not trying to time the dips. I'm not trying to value average when I see Bitcoin on sale every single day. I'm just acquiring a little bit more at a time because that makes sense to me. It really, really does make sense to me. I'm using Swan Bitcoin for my dollar cost average strategy. If you're interested in learning more, please check the link below. You can also follow this link structure here, swan.myb.lol. It'll bring you straight over to Swan Bitcoin where you can check it out. There is a referral incentive, so if you use my link, I'm credited with that. I believe there's an incentive for you as well, but it's one way you can help support the channel without spending any of your money on anything else. So check it out if you're interested in that. But I think this pattern right here has validated a dollar cost average, or at least a very conservative strategy in terms of acquiring more Bitcoin. Hashtag not advice. Nothing you see on this channel should be construed as any kind of legal, financial, or business advice. This is really entertainment and education only. I'm using tools that are freely available to you and trying to help you educate yourself to make better choices. But the choice is always yours. So act like it. All right. That's the Crypto Fear and Greed Index. This is available at alternative.me. And in fact, this Fear and Greed Index widget right here, it's a dynamic widget that if you embed this, the updates, it'll embed just like an image file. If you've set up your own website, it'll automatically update itself every 24 hours. So at the end of the day today, in about 6 hours from the time of this recording, it'll update again, and it'll give you even better info on the crypto markets. Most of this info is taken from Reddit and Twitter, just so you're aware. That's how they measure sentiment. But I think it's validated pretty well how the sentiment has changed. So I like using it. I think it's very useful and instructive. Let's check out what to mine to figure out what our numbers are. Turn on a little supplemental light so I don't disappear there. Guys, what to mine is, this is not perfect, not a perfect indicator, but it is a good indicator of what the performance and the relative profit is for different kinds of GPUs. Now, it's not always perfect, but it is consistently better than most other tools that I've used over the years. Maybe that'll change in the near future. I don't know. As of today, I'm going to keep using it. Let's start with the bottom of the line for Team Red at the R9 380. Our cost per power is 14 cents. We're going to move that up to the national average, above where we were before at 12 cents. We're going to keep it at a volume of over 5 Bitcoin of trading per day so that we can liquidate our funds if we need to pay for power and other expenses, and an average for mining of 7 days. Why am I going back to 7 days? Guys, I have stopped taking the Polygon payouts on Ethermine for my mining rigs. And That wasn't a decision that I made lightly, but I tried to bridge my wrapped Ethereum from Matic or Polygon over to the main chain of Ethereum, and it took hours. I am thoroughly disheartened by the experience so far. Sure, Polygon Matic is assisting with scaling, and in terms of it being sort of a de facto layer 2 to Ethereum, it's doing some good things natively on its own chain. But it's a bit of a walled garden, it's a bit of a sandbox, and I really don't like how restrictive that is. I'm also learning a little bit about how relatively centralized the validators are for that network, and it does not sit well with me. I want out. So I'm not taking payouts for my mining rigs on Polygon any longer, and without giving you any kind of advice, even though the payouts are fast, if we were close buddies, I'd be telling you like, hey, take main chain payouts, because at least you know roughly what the risk factor is or what the risk profile is on Ethereum. And I don't think it's as high as being on Matic right now, based on the relative centralization of the validator network on Polygon. I'm just not a fan anymore. So sorry, not sorry. This is just coming to light for me. I apologize. I'm trying to educate and entertain at the speed of my own education, and well, let's put it this way, I don't find this entertaining, right? It brings me no joy to report that to you, but I'm not going to be on Polygon anymore for my payouts. Going back to a 7-day average for the money, because that's roughly how long it's going to take me to get my payouts on Ethermine. Maybe a little less, right? But not 3 days exactly, because I'm running with a little bit lower hash rate. So calculate. And top of the list, shouldn't be any surprise, is Ethereum Classic, right? This is a 4 gig card. So Ethereum Classic really high on the list, but about a quarter per day. These are ancient cards, though. The fact that they're mining at all is exciting. The Fury HBM2 or HBM card, if you're not familiar with that, high bandwidth memory, almost 90 cents per day on Ravencoin. Now, a word on Ravencoin too. Ravencoin, we'll take a look at it in the portfolio a little later on, but Ravencoin does not have my confidence. Not in the same way that maybe even Ethereum Classic does right now. And that's saying something. Ethereum Classic is suffering from a dearth of development and developer talent as well. The main developer talent in the EVM compatible chain space, they're chasing DeFi right now. They're not building on networks that have very little velocity within the DeFi space. Just in my estimation and what I think I can observe so far of the markets this year going into DeFi Summer 2.0. So I don't see Ravencoin taking its place in DeFi Summer 2.0 or moving forward really in any kind of impactful way in the NFT space. So even though the profits are there, I think it's a paper tiger. Just going to say that flat out. And I haven't really kept that a secret, I don't think. But Ravencoin developers, I know you mean well. I've met several of you. You're talented and solid people. But I think there's a need either for a pivot or for a marketing push into industries that show partnerships that will help your use case feel real to holders right now, to stakeholders right now. Without me disparaging the project at all, I don't think it's a bad project. I don't think that it has a lack of developer talent. I don't think that's the case for Ravencoin, at least from the core developer perspective. But as far as a community building on top of it, I'm not seeing the community add-ons, right? The additional block explorers, the various different kinds of DeFi and other tie-ins that would help make the originally stated use case feel more real. So again, I'm kind of getting ahead of myself here, guys, but I see it at the top of the list and I want to issue that warning right away, right? Get the disclaimers out. Haven't seen you guys in a little while, so I just want to make this clear that I've got some really strong thoughts and feelings on this. I didn't disappear. I've just been featured on a lot of other channels and working on partnerships and working on my own portfolio behind the scenes. It takes a little more time for me, and sometimes it's hard for me to be spread so thin that I'm making videos too. So thank you for your patience, guys. I want to be here with you. I want to share this journey with you, and I really appreciate your support, your subscriptions, your donations. Everything you guys do is just so appreciated. It makes this possible for me, so thank you. But been out for a while. Ravencoin, top of the list there. Ethereum Classic is there also, but not super strong offering. Let's go to the 570 to represent a 4 gig Polaris edition card. Calculate our profits, and it's Ravencoin again. Top of the stack, almost 90 cents, a little over 90 cents. Ethereum Classic, and it's a distant second. And yes, nice hashes on the list, but not my top choice. Go to the 4 gig Polaris Edition card, quickly calculate our profit there. Again, it's 7 days, over 5 BTC in trading volume, and we're at $1.38 per day on Ethereum, right? It tops the list. Ravencoin is a distant second at well under $1. Ethereum Classic, far distant from that. Ergo has not panned out, I don't think, so it's still profitable, but I don't know. I haven't looked at any kind of technical analysis or looked at any professional opinions that have weighed in on Ergo that instill enough confidence for me that I want to go there yet. Certainly right now on mining gear, if you can, if you really want to support Ergo, as of today, since it's going to function within the Cardano ecosystem, which is natively proof of stake, personally, I don't totally understand just yet why the proof of work add-on is so necessary if it is meant to be secured by a broader proof of stake system. It's a bit like the was it a Kala? I'm sorry, one of the Polkadot launched projects that used RandomX. I don't see this playing out well in the long run. But maybe you know something that I don't. If you're an Ergo expert, please reach out to me. If you know one, please have them reach out to me. I don't want to say anything ignorant or damaging in any way. But for me right now, I'm just not seeing it. Okay. So help me understand if I'm missing something. But I think there's a reason that Ergo is dropping on this list for proof of work and on GPUs. But that's our 4 gig Polaris Edition card, base level HBM2 card, high bandwidth memory 2 on the Vega 56. So entry level, so to speak, Vega architecture. And we're at Ethereum, well over $2 per card per day, which is just awesome. It's just amazing. These are still doing so well right now. Ergo is a distant second. Wow, there you go. It's kind of flipped. I guess it has more to do with card architecture than it does with all the other factors that apply. Clearly, much more memory bound algorithm, I guess, with Autologos, or maybe not, but definitely with Ethereum, the memory binding and the memory difficulty of that algorithm makes Ethereum much better on it. Maybe that's the case for Ergo and the Autologos algorithm as well. Again, don't want to go too deep on that. Just want to mention that that's what I see right now. Interesting that it's a close second. Top of the line for HBM2 Vega architecture cards would be the Radeon 7. Let's calculate our profit there. Scroll all the way down, and we got Ethereum at almost $5 per day. Not bad at all. Guys, this is just amazing. Again, I'm going to keep on eating crow, guys. I was dead wrong. When you look at my old video about the Radeon 7, I was wrong. I was flat out wrong. I hadn't run the numbers. I hadn't run the total bus bandwidth by the memory throughput, or the memory bus by the memory throughput. And I think that would have given a much better indication. I'm sure there were others, such as BitsbyTrippin, that had some models there who did a little more work. Frankly, I took that one a little too lightly, and I apologize again. Guys, I'm going to keep apologizing for it because I said something publicly that some people took as advice and either made a decision to buy or not to buy. And on that one, I was so wrong, right? Just so wrong. It's a bit like... a bit like how people who are trying to tell you to buy like these esoteric ASICs and new FPGAs and are shilling you reflinks are very wrong about getting you into very expensive ASICs right now. I was wrong about the Radeon 7, had much more longevity than any of the Vega system cards, Vega architecture cards. Whew. I'm in a bit of a rush, guys. I've got some other things I got to get to today, but I don't mean to take it out on you. So sorry for some of the verbal typos. I'll try to calm myself down. So. But yeah, Radeon 7, Ethereum all day. The Ergo, of course, close second as far as the native coin that you can mine right there. I think it's very similar to the Vega 56 because of that Vega architecture plus HBM2 memory. Go back to the 50,000 and the 6,000 series entry level cards, and let's calculate those. Looks like we've again got Ethereum top of the list. Not a surprise. Lion's share of that daily profit going over to the 6,000 series card, but then Ravencoin not so distant. It's about $1 less in profit per day. Something about that architecture makes it kind of an even split between the ProgPow variant, KawPow, and ETH or Dagger Hashimoto. Pretty darn cool. Top of the line for the 5,000 and 6,000 series cards brings us also Ethereum top of the stack. Slightly higher profit with the lion's share going to the 6,000 series card. Same with Ravencoin in a very similar position, but not quite, I think not quite as close a second place. pretty darn cool, though. You can mine either one. And then if you have conviction about the Raven coin that maybe I don't, or you understand something about it that maybe I don't, then maybe that's the right choice for you too. Still looks like it's profitable enough. The value and efficiency play on Team Green, that is the XX60 lineup. You've heard me say it for years now, guys, for years. And if you have GTX 1060s, you're probably still hashing and you're probably still in the money. You're welcome. Same with the Polaris Edition cards. You're back in the money. You're welcome. Called that years ago at the launch of the Vega series cards and the Founders Edition Vega cards. Feather on my cap. I feel good about that one, and I feel very, very good about making that spreadsheet and that lineup that I did when I did. It's definitely helped me out in my consulting business, and it's helped me make really good choices for clients who've paid me really well to help populate their small and mid-scale mining operations. But here we are back at that value and efficiency play. 3060 top of the line. We're not going to go with 3060 Ti. And again, shout out, while I get that calculation going, shout out to Brandon Coin for his recent video on the low hash rate mining limitation. I think that's worth a watch if you're not already subscribed to Brandon Coin. Shout out for getting that done and not giving up while the price action has got us in the doldrums, and some of the view counts have got us down in the dumps. But checking out the totals there, just over $5 for those 4 cards. Lion share going to the 3000 series, and let's go to the top of the line instead with the 3090. 2080 Ti, the 1660S, and the 1080 Ti. So the king of each generation, each of the previous generations of NVIDIA cards, and our calculations show us at almost $12 per day, about $11.50 in Ethereum, with Ravencoin not that distant either. Again, the representation of the performance on Team Green on Ethash or on Dagger Hashimoto tends to represent pretty closely the balls to the wall performance on ProgPow variants for Team Green. Just kind of, we know this already, right? Their memory hardness works in favor of Team Red, but the global performance of Team Green tends to match what ProgPow does using the whole device. There we go, guys. Is it really any shock at all that Ethereum is still king of profit for GPUs? It isn't to me. With the London hard fork imminent, right? We're only a couple weeks away, days away, really, if you want to count it that way. I think that this maybe is the last hurrah for GPU mining as far as like really, really great profits right now. But I do have a gem that for me has got me considering switching my rigs from Ethereum. I kind of teased at that before. We'll talk about it in just a minute here. Let's look at our portfolios first, though, now that we know what's profitable to mine. On our GPU list, we got REN BTC, or any kind of wrapped Bitcoins, that have outperformed Ethereum by a margin of about 5%. Our total P&L is down 40.58%, but our wrapped Bitcoin on Ethereum has outperformed the native asset Ethereum, right? So if you've been mining Ethereum, there's a reason I've been tracking this, because you've had the option, if you've been mining Ethereum, to use something like 1-inch DEX or Uniswap to be able to wrap those Ethereum into Bitcoin at whatever the fees are at that time. I know it's not always cheap. However, provided you didn't pay more than 5% in fees, you would have been up. Even if you paid 3% in fees, you'd be up 2% over what you were doing with just your Ethereum hanging out natively as that native asset right now, at least since we started this portfolio. Yes, Ethereum outperformed Bitcoin early in the bull run, and yes, it's performed admirably since last year if you've been a long-term hodler. Certainly since, if you've been a hodler of Ethereum since the ICO. So is Ethereum a bad asset to hold? I mean, without giving advice, no, it's great. It's a great part of a well-rounded portfolio right alongside Bitcoin. Just saying, the numbers here don't lie. At least as of the snapshot that we put $1,000 into this paper portfolio, BTC would have outperformed your Ethereum. Even if you're mining Ethereum, you might want to consider wrapping some of your Ether into wrapped Bitcoin, the most decentralized type you can, in my opinion, right? Wrapped Bitcoin, WBTC, might not be the right ticker symbol for you. REN BTC might be better, a little less centralized, a little less controlled, but you get where I'm going with that. Matic Aave interest-bearing wrapped ETH. I'm really not happy with this. It's performing a little better though, right? Because it is interest bearing. So doing not too bad. Ravencoin also performing admirably and on the uptrend. It's had a significant recovery. It's the only one that's positive over the 7-day. So don't know what's going on there. But again, Ravencoin team, good for you. That's awesome. I'm excited that's happening. I sincerely hope it's attached to what I mentioned before in terms of giving it this really solid long-term trend, right? Up and to the right. So real currency holding its own, but let's go to our biggest losers. Way down at the bottom, we've got Haven still and Swap. However, Swap, as mentioned on the last episode, is, well, it's a very low cap. It's a micro cap. Technically, it's below $1 million total. Same with BitTube. They are, frankly, they might be on the way out. At the end of this market, we might not even have a market cap to speak of for either one of these projects. I sincerely hope they can turn it around. A lot of development has gotten into it. In particular, another character who I need to publicly apologize to, I think, is Seb Green. Seb Green has been instrumental in both of these projects, both Swap and BitTube. Yeah, he's a bit rough around the edges. Yeah, he's a bit of an abrasive character. Yeah, he can be really difficult. Would I want to go out to lunch with the guy every day as a coworker? No, I wouldn't. But he's done really good work in these communities, and he's contributed a lot to the code base and to the shared knowledge, institutional knowledge of these groups, helping them weather the storm over the last several years and get to where they are now. It'd be very sad to see both of these projects disappear, because I know he's put a lot of work into them, and he's also helped a lot of the exchange community, right? In terms of crypto note exchanges and some other exchanges, definitely been a good actor in the long term in this space. And it's sad to see these projects not perform super well. But market cap isn't everything. Coin price isn't everything. I know these are also just really great experiments to help us figure out what works moving forward. However, bottom of the list is still Haven. Yet, after a 76.1% dip, right, we are still seeing a total market cap of over $45 million. There's clearly interest in this project. There's clearly more upside. And I mentioned this on BitBoys Around the Blockchain show, when they asked me about a hidden gem that I thought was worth taking a look at. And I said Haven, because there may be a renewed entry point now for people who are waiting for a better entry point from before. Currently, it's a little bit below when I mentioned it then. It's at $2.99, its current price per coin at the moment. And we don't even see it on the top rankings on whattomine.com. It doesn't look profitable to mine at all right now. It really doesn't. So I'm going to jump back and talk about this a little bit more. Guys, spoiler alert, this is what I was talking about before. So we are going to take a look at our What to Mine numbers. I'm very partial to Team Red. If you're on Team Green, this might not apply to you straight up, because crypto notes simply just don't perform quite as well. Team Red has always kicked butt and taken names when it comes to mining crypto notes like Haven, like BitTube, like to a lesser extent Swap, because they changed their algorithm, but other crypto notes similar in that family. So let's take one Polaris edition card, or just a sampling, right, of HBM cards and of the newer architecture right there. Let's just go top of the line, right? Let's go with top of the line Polaris, top of the line in Vega HBM, and top of the line in 6000 series cards. And let's calculate, because that'll give us some sense for how these all do. See if we can even get Haven coin or Haven protocol to show up. And it looks like it's not even on the list right now. It's possible that they asked specifically to be taken off of What to Mine for now, or they're not paying whatever the retainer may be. Okay. Oh, yep. Inactive coin calculators. There you go. And I think there's a reason for that right now. Rollback incoming, not listed. What does that mean? Well, it's self-explanatory, right? But if not, here's an announcement from the team themselves. Haven Protocol issued a specific announcement based on the June 2021 exploits. Guys, why am I paying such close attention to this? Because I think as far as miners go, we very rarely get to actually mine the dip. We may be able to with Haven right now. Again, do your own research, but I'm just going to suggest that that may be the case for you. And without giving any kind of like advice or whatever else, I'm going to prompt you. If you're watching this is a high enough market cap coin that there's room for all of us, right? We're all going to make it. Anybody who's watching this video in particular, we're probably fine. We're the few, we're the proud. We're not the Marines. We're GPU miners. We're even better. So Yeah, I'm kidding. All my Marine friends, please don't come and kill me in my sleep. But you know what I'm talking about, okay? Let's band together and we can secure this network. And if it makes sense to you after you've done your own research, you may even be able to have a better arbitrage opportunity by securing the network now and gaining those mining rewards after things go back online. But it's a bit of a tricky thing. Let's jump over to haven.miner.rocks. I love that Miner Rocks is, here we go, we'll go over to miningpoolstats.stream for the Haven readout here. And I love that Miner Rocks is in the game, right? They've got a fairly low fee. They pay out PPLNS, and they've got about roughly 3.5 mega hash of hash rate total. HashVault Pro is pretty high in the hash rate right now. They're over 50% of the total net hash, which is why I'm not looking at them seriously, even though they pay out in the same way, plus solo mining at the same fee as Miner Rocks or Hero miners. But Miner Rocks, since they're a little bit lower in that ranking there, and they could stand to move up a little bit, either them or Hero miners, I think would be just fine. But that PPLNS payout method is, I think, a great way to get paid on a regular basis. So Miner Rocks, I think, is what I'm going to use right now, and I'm looking at it at least right now, turning my rig towards it for a little while to see when the rollback occurs and see how well the team can recover. Like, I get it. This is difficult for everybody all around, but proof of work blockchains need security and you get paid for it. That's exactly how it works. The block subsidy is there to incentivize your security. So I'm paying attention to what Haven Coin is doing right now. And even though the profits seem really high on Ethereum, I don't know that I'm willing to bet my profit margin against holding Ethereum right now for the London hard fork update, right? And when it comes to Haven, I think right now they've asked people not to buy an exchange, but the network itself does need security, and they are looking at paying out post rollback. So I view that as a good faith way to participate right now in this price action and potentially getting in at a much more attractive entry point than 3 months ago. So again, not advice, but that's where my mind's at, guys. I'm wearing it on my sleeve. I'm not even pretending to be focused on anything else with my mining right now. It just got my attention. So that's what I'm thinking about with Haven. Bottom of the stack, but far from dead. And my faith in the developer team's ability to come back from this, well, they've done it once already by having a bit of an issue. And early on in these systems, just like with Thorchain, early on in these systems, when there are hacks or hidden inflation bugs or people get away with theft of some type, it's very common early to do some kind of a rollback, just like Bitcoin did way back in 2010, right? Or 2011. So this stuff happens. Or like when they found the hidden inflation bug in 2018 in Bitcoin, thankfully not broadly exploited. But these things happen. These are very difficult adversarial systems, as we heard Pierre say when he was on the channel. And, kudos for giving it the old college try. And then once you get slide tackled, getting back up, grabbing the ball, and making a beeline for the end zone, right? So this is not unexpected, guys, and it's not bad to support projects like this. I will say yet again, the rest of the bottom of the stack, BitTube and Swap right now, I will definitely not be mining them. I do not expect to see a return to dominance or the former glory, right? It'll never be dominant, but I don't think it'll even return to its former glory. So I think we're done there. Conceal, very low market cap still, but not out. I think it stays on the list right now while it stays in the 7-figure range. And then the rest, of course, being in the 8-figure range and above, they have rightfully earned their place. Ryo currency, even though it's holding, again, you let me know in the comment section, should I call this as well when I revisit Swap and BitTube? I want to get your suggestions before I make any moves there. Jumping out of our GPU mining portfolio, I know that took a while, guys. Thanks for your patience. I appreciate you being here. I'm trying to be thorough. The P&L is negative 26.07, which again, for the hard drive mining space, we're doing phenomenally well. MadeSafe coin is still carrying the portfolio. Burst coin, now rebranded to Signa or Signum, is doing okay, holding pretty well, but it's still down almost 20%. Not down as bad as, say, Ethereum, but not doing quite as well as Bitcoin in the same time frame. Bottom of the stack, doing even worse than before, is Chia. That's right. You thought it was going to find support at 300. Nope, it's dipping down to $208. Or we're seeing over 70%, right? 73.96%. You hate to see it, right? You hate to see people who have worked to try to build something get wrecked. But thankfully, the developers of Chia already have over $60 million of VC capital. They're doing just fine. All right, moving from our hard drive mining portfolio into our CPU mining portfolio. Monero, bottom of the stack with 67.04% down. Total PNL is down 40%. Coin is down over 50%. Don't know what's going on there, but their market cap is still strong. They're going to bounce back, right, guys? They're going to make it. They're going to make it. And their developers are involved in all manner of securing the network, including running pools, including whatever other staking and masternode devices they have. So the Coin development team, I know, marches on undaunted, even though they have experienced that 35% dip this week. Not sure what the news is there. Maybe somebody can let me know down in the comment section. Get me up to speed. What's going on with Coin? Because I've been really shocked to see this. In conversation with Nicholas and in conversation with Frank from their project, I mean, we've hung out on Clubhouse on numerous occasions, and while we have some ideological differences, I believe they're good faith actors. I believe they're working to try to build what they say they're going to build. So I'm confused. Guys, help clarify it for me. Top of the stack is Raptorium. It's doing okay, right? From the $1,000 we put in, it's performing admirably. Monero still down kind of bad, but $200 Monero. I mean, if you told me that Monero was going to be worth $200 this time last year, I probably wouldn't have believed you. Still pretty cool. But we're not talking about this time from last year. We're talking about this time from when we made this paper portfolio. So here we are. And last but not least, our ASIC portfolio shows us nothing, absolutely nothing. Oh, there we go. Just taking a little bit of time. Decred is at the top of the list. Our total PNL down 36%. Horizon getting punched in the face, down to $50 per coin, but market cap is still healthy at $500 million. And I'm sure that Rolf and the team are doing just fine. I'm sure that they are okay. So I doubt that they've stopped development, but I'm not sure what the latest developments are that will help them pull out of the nosedive. That channel is pretty intense, and I'm not seeing the same mild recovery or support, whether they're dead cat bounces or what, right? It's just not the same dramatic curve coming out of there. So really hope you guys are okay. Pirate Chain is also second from the bottom, but again, Pirate Chain at over $2. I mean, if you had talked to people who were mining it early on with GPUs, they wouldn't have believed you either. This is pretty insane. And the market cap very healthy at almost $500 million as well, based on what it does. Guys, these are still mid caps. These aren't even in some people's books, these are still even considered micro caps, right? So do your own research, be very cautious when you approach these projects. But okay, I'm not too surprised. Not too surprised to see Pirate Chain at that price, but I am a bit surprised to see, again, the weirdness here. Was there another exchange listing, guys? I'm wondering what these weird weird formations are when we check in on the Pirate Chain chart. What's going on? Did it get another exchange listing? Tell me down in the comments, dudes, because I don't know what's going on here. And every time I see those weird spikes, my mind goes to manipulation, and I don't want to think that about this project. I want to think better of it. I want to believe that they stand a very good shot of surviving without weird formations that indicate some kind of wash trading. Guys, I'm just going to say it out loud, right? I'm just going to tell you what I think. I hope that's not the case. Set me straight in the comments. I hope it's something else. Tell me. But that's our portfolio in a nutshell. Let's take a look at a little preview. What we're going to take a look at in the next couple of days. Going to be reviewing the Q2 quarterly report from CoinGecko. I think this is a pretty great service that they do in terms of the additional value-added content. I think I may be posting a link to that here down in the description. You can also just go to coingecko.com, check that out, and read that at your leisure. 65 pages, I think, of really great. Looks like a slide deck, really well laid out PowerPoint slide deck that kind of goes over just bullet points for the highlights of the last quarter in the broader cryptocurrency scene, but of course, a massive emphasis in DeFi. If you haven't been paying attention to DeFi, you've been left behind, and they've made that very clear. But I've already got that open and downloaded. I'm so far pretty happy with what I'm reading about it, and it kind of matches a bit of my beliefs in the landscape and in some of the analysis. What I will say is, spoiler alert, I'll just mention this: their take on the Bitcoin dominance kind of not staying upright. I don't think that it's going to steady. I don't think that it's going to correct to going back above 50% dominance again anytime soon, if ever. It is possible that we're seeing the end of Bitcoin dominance as we previously knew it, in the same way that the stock to flow model has largely failed in this cycle. Okay, guys, I know I'm going a little bit longer than usual in this video, but no apologies. Guys, this is important, and I needed to catch up with you, and I owe you this. So thanks for your attention. But yeah, Bitcoin dominance, guys, the numbers don't lie. The numbers don't lie. There was a flip from over 50% Bitcoin dominance to as low as I think 39% Bitcoin dominance in this most recent cycle, in this most recent quarter, with Ethereum really coming up because of DeFi. Again, DeFi Summer 2.0, even though there are alternate networks that assist Ethereum in creating DeFi and in assisting with all the velocity and volume, all the liquidity pairing on other adjacent networks like Polygon and others. It's still Ethereum at the end of the day that everything settles on. So there's a reason that we're seeing exactly what we're seeing here. Let's jump into our cost to mine one Bitcoin. Right now, with our two models, we'll go with just the Antminer S9 and see that we need, we can actually break even at 12-cent power. Even at 13.5-cent power, we got this on lock. Now it's going to take us forever to actually mine one full Bitcoin, and it's going to cost us over $27,000 to do so. Would I mine on an Antminer S9 at home? No. No way. Not at all. Would I mine an Antminer S9 in a facility where I was definitely getting 8-cent power hosted? Maybe. I might. Because right there at $18,000 USD, I think we're maybe okay. You're seeing calls on some of the TA specialists, Twitter profiles and channels and such for, at least for the more bearish case for Bitcoin, of going possibly below that. Still, when there's a recovery, because there will be a recovery from $10,000 Bitcoin if we ever see it, then you're probably still fine. I think in the long run, being able to acquire Bitcoin at 18,000 per coin right now using an Antminer S9 or anything similar to it. But I don't know that I would go acquiring S9s right now. Just my take on it. And that said, I'm not really acquiring any ASICs at all. Let's take our alternate view or alternate model here with the WhatsMiner M20S, really good kind of middle of the road model here. And at 8-cent power, if it's hosted somewhere, you are getting your Bitcoin for a little over 10 grand. Not bad at all. I think you're far more future-proofed going with a model like this. But going back to the previous standard of what we were doing before, 12-cent power, you can even just bring that all the way up to 14-cent power. And you can see that the break-even point is already almost 25 cents per kilowatt hour. You're fine. And at 12 or 14-cent power, you're still acquiring at 18,000 USD, making it, in my opinion, a far better acquisition than the S9. I've been saying that for a while, right, guys? Nothing if not consistent. Since we've been measuring the price of mining one full Bitcoin, I think I've been consistently telling you the M20S is a phenomenal model to acquire if you can do so at a really good price. And if you're actually in the market to do that, it looks like you're not going to get totally wrecked when prices correct themselves and when we find whatever our bottom support is, as opposed to like just getting anything that hashes Bitcoin at all and trying to like liquid cool it and pull out all the stops to get it to squeeze out a tiny bit more performance. That's not always the right way to go, guys. But anyway, not advice anyway. I appreciate you watching all the way to the end of the video. I do not have a chart for you at all. I'm not going to show you that. You can take a look at it for yourself. A lot of people are saying like, hey, well, we're moving in this sideways channel between 31,000 and 41,000 for Bitcoin, and everything else is largely correlated. Hasn't changed. Kind of boring. And that's okay, except that with the fear, the fear right now and a lot of the other sentiment going into the markets, if it breaks downward out of this channel, it's going to be really scary. And if it breaks upward towards the top of this channel, we're going to get another false start like we've had for a while. We've been testing that resistance down closer to 31,000 for a while, which for me is a little bit nerve-wracking. We saw this a while back, right? When Bitcoin, it just seemed like a stable coin at the mid 6,000s. And we said, this is just great. We could stay here forever. And it totally dipped, right? It totally dropped down into the 4,000s and then into the 3,000s, like 50% dip. If you can't handle that, this isn't the right place for you. I'll leave you on that note, guys. Thank you so much for watching to the end of the video. Thanks for giving a thumbs up. Thanks for sharing this. Thanks for giving me feedback down in the comment section. I want to make this the most thorough mining/portfolio and DeFi show that you can watch in one sitting to get all the news that you need to be able to make better choices. Guys, I love your face. Remember to stay private and mind your biz. Thank you so much for watching all the way to the end of the video. If you want to be notified of videos like this in the future, first off, click subscribe, press the bell icon. Additionally, you can sign up for the Mind Your Biz email newsletter. That'll give you exclusive access to certain freebies, notifications for deals within the cryptocurrency mining space, as well as some of our flash sales for merchandise, which you can buy with cryptocurrency. That's right. It's the only cryptocurrency merch that you can buy with cryptocurrency. We practice what we preach. As always, thank you so much for watching. You're the reason I make this media. I love your face, and I will see you in the next one.